Good morning, traders. This is Chris Buss with Traders Profit Compass with a pre-market look for Wednesday, September 2nd. Jumping into the indexes, yesterday we had a nice move recapturing the midpoint of this channel. This morning, futures are up. So hopefully this midpoint line will act as support going forward. If you're trading off the 2-hour time frame, I would key off this support line and be careful on any breaks below it. Also, this morning on the gap open higher, always be ready for a flash gap fill lower. If you're not in and you want to be in, if you see that flash gap fill lower, that's often a good place to get long, just as it closes the gap against yesterday's close. So this looks good. We've got the PPO turning up and RSI holding its trend line. So as it stands now, it looks bullish. Moving down to the 30-minute time frame, we had a strong closing candle. I think today you can stay long against yesterday's close right here at, I don't know what it was, 352.60. If you get the gap fill lower and it tags that level, I think you can pull the trigger on a long there with a stop just below. And as I noted on the 2-hour time frame, PPO is just turning up now, so if that follows through, we could see a nice move higher. RSI continues to operate in its bullish regime, so no warning signals as far as the indicators go at this time. I still like it long. If you were to see price come back down and break below 351.50, I think then you need to be concerned, at least for a short-term pullback into this 350, 348.50 area. Moving on to the Qs, 2-hour time frame. The train just keeps on rolling. I think you stay long here. We've got a nice trend line coming off this swing low down here. If you're long, I think you need to stay long against this trend line. If we were to drop back down below and break this 294 area, I would certainly pay closer attention. That may move fast, once we break that level, if we do. So be concerned with the trend line, and I would stay long against it. PPO looks great. RSI holding 70. That would be an area where I would look if you see RSI break 70 and this PPO roll over. That's going to favor lower prices, so that would be a cautionary signal if you're following this time frame to sit up taller, be concerned. Don't take anything for granted. Don't wish and hope. If you see this trend line break, take action. Moving down to the 30-minute time frame, we closed yesterday right at just under 300. We're set to gap higher. Again, same comments apply. Any gap fill down to 300 that holds, I think, is a buy. I think that would be a gift, but it's got to hold. Set your stop just below. We've got a nice trend line here to shoot against. I think as long as this trend line holds, we're in good shape. If you see 298 fail or anywhere along this trend line here, I would be concerned. That would be a point where it could go very quickly given where everything sits right now. The one thing I don't like, and it is what it is all these highs have been divergent highs. You can see momentum peaked back here, and now we're at fresh highs, but with lower momentum and lower RSI. I don't like that at all. I'd much rather see higher momentum at higher prices, but it's not a sell signal. It's a yellow flag, and as we've discussed so many times, we've got dozens and dozens of yellow flags. And if a yellow flag is going to keep you out, then stay out. But if you're in, be aware of it. Keep your head on a swivel. Don't ignore your levels, and just stay cognizant. And I'll say it and I'll say it again. Take for granted we're in a bubble. Okay? Very hard to justify if you're looking for justifications. Trying to justify price. Set all that aside. Trade price. Watch your levels. If levels hold, things are bullish. If they start breaking, quickly be flexible to change your mind and get out of your positions. It doesn't mean you have to short or, go crazy the other way. But if you see support levels and trend lines break, get out of your longs and then reassess and decide whether you want to be short. For instance, if this 296.74 were to break, I think you're going to see a fast move down to 293. That seems like a good shorting opportunity. But wait for it to happen. Don't anticipate it. Take each candle one at a time and drive your decision making off of that. And I think you'll be fine. IWM had a big technical move yesterday. We had been watching this zone here, 155 to 156.50. We'd been fading the highs and buying the lows. That's worked out for a lot of, $1.50 trades, oftentimes getting a round trip during the day. Yesterday, we had a look below that failed. That in and of itself is bullish. It recovered this 155, which has been support. Great place to get long. Your second chance to buy was here on the breakout of 156.50. Now today, I think in the pre-market we're already trading above this level. But this 157.25 is the level to hold. And I'd be a buyer on any breakout above 158. I think you'll see, if things stay productive and we get a breakout here of 158, I think you can be a buyer looking for 160. So this is 157.25 and 158 are your key levels this morning. But I like this long, the way the setup is. Quick look at bonds. We had another up move yesterday. Your key level is 164.70. I think if you break above this level, you can be long and then look for a first stop here at this prior high at 166.50, more or less. So here's your key point of interest, 164.70. Moving on to metals, bad head fake yesterday. We had an initial move higher, and then suddenly we had euro weakness, dollar strength, and that took the air right out of the gold and silver trade. Obviously took the miners with it. Futures are indicating lower again this morning. So if you're a short-term trader, I would I wouldn't be long right here, especially with the dollar strengthening, euro weakening. That's going to be a headwind for gold short term. Let's see where this thing stabilizes and then take another look at it. So just moving on to GDX, as we talked about, we had looked for this 42 breakout. I and some others probably took that long on that technical signal, and it was a head fake. It was a whipsaw. There's nothing more that you can say about it. Now, if it holds right in here with this 41, there's a chance to save it. But if the dollar bounces strong here, it's going to push price back into this consolidation triangle and possibly make a run down here to 39. So right now, I've stepped aside on the metals to see what's going to happen, and we'll take it from there when we get a fresh signal. Quick look at silver, same thing. You can see this bearish engulfing reversal candle yesterday. I see this morning now that silver's down another 3%. So that's a short-term bearish setup in silver. Facebook, I really like this setup, this strong move with a bull flag. I really like this long. I haven't looked at the futures, but I'm sure it's gapped above this level. If you can get Facebook at around 300 with a stop down here, 297.50, something like that against this trend line, I think you take it long. If price gaps appreciably higher, but then comes back and holds this prior high at 303.75, I think you can buy it there with a stop just below, and then see if it can make a push higher into the day. But I really like this setup. This is the same setup we had in Netflix, and it's just a pretty, picture perfect bull flag. And if you take the measured move of this structure, you're looking up, 315, 320. So I think it would still be worth your while, and I'll certainly be looking at it to see where price opens. And if it opens down here around 300, I want to be a buyer there. And like I said, if it gaps higher, pulls back, but holds this prior high, I would be a buyer there as well. I really like that setup. We carried Apple long overnight. Somewhat risky, but a calculated risk. We had gotten long down in here with calls for Friday 130s. Yesterday, late afternoon, we rolled higher to the 135s and held it overnight. I think I saw in the pre-market mid 136s, 137 in that area. I saw a ton of order flow, institutional order flow, looking for 137.50 to 140 into Friday. I want to keep riding this long as we can. My exit point would be on a break below this nice, well-defined trend line here in dashed brown. You got to respect it if it rolls over. With short-dated options, you got to get out if price drops below. But as long as it holds and the market stays constructive, I think this can push higher and possibly find 140 by Friday. And if you are in those short-dated 135s, as far as managing the trade, do what we've always done, and that's roll and protect. If you're $2 in the money on a Wednesday afternoon, roll up to 137.5. Take that win off the table, stay at the money, and stay long. Okay? Never take anything for granted. A giant red candle can come at any time. So when you get a win and you're well into the money, roll up to even money and stay with the trend as long as you can. Amazon. I saw in the pre-market, it's up about $40. So, it may be tough to get an entry right off the bat, but if you see a quick pullback on a backfill, or it pulls against this trend line and holds, I think you can take it long. I realize the options are really expensive. If you're not comfortable with that, just step aside. There's other opportunities. But if you're comfortable trading Amazon, I think you can stay long against this trend line, and certainly long against 3,500 at this breakout level. Microsoft, another. This is the Facebook setup. Big impulsive move higher. Nice bull flag. I looked in the pre-market, and we're trading in here at, say, 229, give or take. Getting the entry, at 227, that horse has probably left the barn as far as today is concerned. If you got a quick pullback, I would take it long. If that level holds, 227, that would be a great entry point, but let's assume it doesn't. If it breaks out to new highs at 230, take it long. Set your stop just below. This measured move projects out to 240, right in that area. I've seen a lot of institutional call buying in the 235, 240, 250 area. And you don't have to get options for Friday. Go out in time. This can be a nice swing trade opportunity for you. Look out to September in 2.5 weeks. By the September, 235s, just a little bit out of the money, or 230s, whatever you want to do, or a spread, a 230, 240 for September expiration. You can play it any way you want. All I'm saying is a breakout to new highs, you got to buy. And you've got a very clear line to shoot against here at 230. Set your stop just below and take it long and see where it takes us. Google, big move yesterday. A lot of institutional money flow. Stay long against 1650. Today, if you're an active short-term trader and it takes out 1660, I think you can stay long against yesterday's high and see if there's a push, higher today. Netflix was our big winner yesterday. You should recognize this structure. It looks just like Facebook. It looks just like Microsoft. Big move up, consolidation, flag, breakout. We took it right in here. 518, 520, 523. We rode it higher into yesterday, and then we rolled to the 560 calls for Friday. Saw a lot of big money shooting at 570 and even 600 for Friday. This 575 is the prior high. It also coincides with the measured move. I made a video on calculating the measured move. Look for it. It's a little 6-minute video. It's already posted if you want to see how that's done. I'll show you a couple ways to do it. But if it takes out 575, it's almost a foregone conclusion it's going to 600. Whether it makes that by Friday, I have no idea. But as we've seen, it can move $30, $50 in a day. So I wouldn't put it past it if the market stays like it is. So it's a little late in the game to be, taking new positions. But if you're comfortable with that, I think you can buy a breakout above 560 and then set your stop just below. Look for 575 as a first target. If it breaks through, I'd be looking for 600. Target. This is more of a swing trade, but I really like it. Again, same setup. Big impulsive move on earnings. Multi-day consolidation. Nice flag formation. I think if you get a break above 152.50 out of the flag, you buy it. Measured move is in the 170s. So they say, flags fly at half mast. This implies the move is only half over. So real hard to hold it through earnings, but if you did, great. If you didn't, I would be buying 152.50 as a swing trade, and I'd be looking out into October. Give this one time to work, and my hope is that it'll make its way up into the high 160s, mid 170s area to complete this measured move. KWeb, Chinese Internet ETF, made a nice breakout yesterday. I think you can take this long against 71.50. As we've discussed many times, we've got a $7 consolidation range. So you break out of a $7 consolidation range, you're looking for $7. That would put price up at 78 for a measured move. I like that trade. I like that PPO's turning up. I like that RSI is still operating in its bullish regime above 50. Nice way to trade a basket of Chinese internet to capture Baba and JD.com and all those other names that you may not care to or want to have the single stock risk. I think you can capture a lot of that here in KWeb. Sorry for the phone call. Intel. This is a excuse me.
Hello. Please leave a message after the tone.
Sorry about that. We've got this big gap in Intel above 52. Set yourself an alarm there. I've got one set. A lot of institutional money is looking for call side, upside move. Anything above 52, I want to get long. This is not going to move real fast. So if you do enter the trade, look out in time. Look out to October, November, and see if we can get a longer term play into this gap here. The CENX is an aluminum stock. If I don't have it drawn in here, but this is another bull flag. Impulsive move, pullback, breakout. And you've also got this nice uptrend line to shoot against. I think you can take it long here against 9.5 and look for a minimum of 11. And actually I'd be looking for more in the $12 to $13 range. If you look, base metals, commodities, they're all lighting up. Okay, so this is just one example. If you dig further, in fact, I'll show you this SCCO, which is a copper miner, along with FCX, which is Freeport-McMoRan, on fire. Now, would I buy it right here? This is a weekly chart right here at 49 with long-term resistance at 50? No. But I got an alarm set at 50. And if this breaks out and copper and all the base metals keep ripping, and this breaks to a 5-year high or all-time high, I'd have to look, it's going to go higher, and I want to participate in that. So sift through some of those base metal stocks. I think you'll find some really interesting opportunities. And if this inflation, reflation, dollar weakness environment persists, they're going higher. This is my last chart for this morning, but I also want to put a bug in your ear about agricultural commodities. Look at coffee. Look at soybeans. Look at wheat. Look at sugar. They're all going higher. And one thing that's nice about that asset class, it doesn't have anything to do with Facebook. Okay, it doesn't have anything to do with the stock market. It has to do with interest rates, falling dollar, supply constraints, all that. So if you're looking for, an uncorrelated asset, take a look at those. They've all got ETFs. They've all got option chains that are viable. I encourage you to take a look at that. So, last reminder, keep your head on a swivel. We don't know where this is going. I want to participate, but I also want to be cognizant of the risks. I'm not out there with every dime that I have to my name in complete FOMO, and I don't think you should either. But I am participating. I want to continue to participate as best I can with a defined amount of risk, with the understanding that one overnight or one red bar could make everything I've got worthless. And if you approach it that way and you're sized right, you should be able to sleep well at night and still participate on the upside. So that's my philosophy. That's my take on it. I hope you enjoyed the video. I hope it stimulated some good ideas. There's more where that came from. If you like the video, please give me a thumbs up and subscribe to the content. I'll keep you informed on a timely basis of things I'm seeing in the market, and hopefully it'll set you up for some nice trades. Look over in the show notes. There's links to my content on the blog. There's a place you can register to get all my content delivered to your email box every single day and midday for active traders. We'd enjoy having you. So this has been Chris Buss with Traders Profit Compass. Have a good day of trading. Talk to you next time.